Hello, everyone, and welcome to today's morning coffee with Mike. I don't have a coffee with me today, but we do have some really good conversation because we're going to be talking about the trading pyramid. Now, what in the heck is the trading pyramid? The trading pyramid is this right here. It's basically how I view building my open trades, how stocks move from my universe list or from the market in general to eventually getting bought. And so put this together so that way you could hopefully have a better sense of how you could do it for yourself. This is the same process that I used when I was trading part-time. When I finally turned the corner and started to have some real success. I've been using this process for I'd say close to 15 years. So if I was able to do it part-time and it's still working for me doing this full-time, I guess you could say, then it can certainly work for you. So we're going to walk through this here, but I just want to give you the thought process and rationale behind it first. So first off, building the pyramid. We're going to take these stones and we're going to build our pyramid. So the first layer of the pyramid starts with running screens. There's a tool that I like to use to run screens. It's called MarketSmith. You don't have to use MarketSmith. I prefer it because it helps me save a bit of time. And there's a bunch of screens that I've built myself that are all in here. You might see them sitting right over here, all the sector leaders, I call them, accelerating earnings and sales, IPOs with earnings, IPOs with sales. You could get the hint that the initial screening process really starts with fundamentals. I use fundamentals to make sure that I am fishing in the right pond. And then after that, the technicals are what I use to reel in the fish. So most of the work is done with the technicals. Again, the fundamentals just make me just ensure that I'm fishing in the right pond. And so that's why all these screens here, all these weekly screens, they're all built around fundamental data, right? So then from there, it's very important, very wise quote from Bruce Lee, don't concentrate on the finger. What you want to do is focus on the bigger picture here. So I'm screening for all these different stocks here, right? And this image is just kind of zooming in a bit. So I'm going to go back to the prior screen because that's kind of weird. So the idea as I'm running these screens, I'm not just focusing on, well, here's a bunch of stocks that pass my screens. As I'm running these screens, and I run these screens once a week, I'm focused on, well, what kinds of stocks are passing? Are there more stocks from a certain group passing one week? Are there more stocks passing one week? Or am I kicking a lot of stocks out of my universe? That's going to tell me quite a bit about market health, market conditions, in addition to getting stocks onto this uh, open trades tab, right? Or this open trades list where we're actually going to be buying stocks. Now, think about this. So we're running our screens, right? There's all these 10,000 stocks in the market, all these little grains of sand. We're only going to use a small handful of them, the highest quality, to get into that base level right here. So if your base is nice and wide, meaning that there's loads and loads of stocks passing your screens, then that would imply a much sturdier base, wouldn't it? Now, let's say the market conditions are turning a crap and your base is getting smaller and smaller and smaller. You're going to have a much smaller pyramid, right? It's one way to start to determine your expectation for what kind of a condition are you in right now. Do you have a lot of stocks passing or a much smaller amount of stocks passing? Because that's going to shape your pyramid and the profits that you might be able to expect from that pyramid. Now, I do see some questions coming in already. Jawei, welcome. And I have some people over here that are typing in on Instagram. Welcome, everybody. And if you do have questions as we're going through this, please type them into the chat and we'll go through them. We'll go through questions at the end, unless if something pops up that I see is super duper topical. right here, right? Like, so that this is talking about scaling in with that kind of pyramiding. Uh, we could talk about that in a bit, but for the way that I'm looking at this kind of a pyramid, it's the whole screening process and eventually getting into the types of stocks and ETFs that I'm looking to buy. So let's continue here. Right? So the next part of this pyramid is the stocks that are setting up in patterns. So I'm going to be going through that whole list of stocks that pass the universe list. And I'm going to quickly filter through those stocks to see what do I see that happens to be setting up. In fact, I will bring MarketSmith down here because I just finished doing this for this weekend, and I'll give you a sense of how I'm doing this and why. So right now, you can see that there's 335 stocks that passed my screens over here. And so what I'll do is I will quickly flip through these names one at a time. I'm looking at a weekly chart right now. I also have a daily chart that's open on another screen, right? So this is what a daily chart of this stock here, CEIX looks like, right? So I'll go through these. I'll go through them one at a time, and I'm mostly focused on the weekly time frame at this point. Weekly time frames give us a bigger picture of what's happening. And I'll just quickly tab through each of these stocks here, and as something catches my eye, like this one catches my eye, I will add it to the trade ideas list. Now, you might be asking yourself, well, what about this catches your attention? It's a very good question. At this point, I am looking for setups. What's a setup? Setups need to be clearly defined. I believe we spoke about this in a prior session, but to quickly recap, a setup is going to be uh, anything that you've personally defined. So for me, I look at certain patterns on the chart, certain consolidations, if you will. Some that they have different names. Some of them are flat bases. They kind of look like rectangles. There's another one called a cup with handle. There's another one that's called a double bottom. I look for volatility contraction patterns where volatility is starts off on the left side and it gets progressively tighter as it moves to the right. And these patterns tend to be multiple weeks long. So I'm looking for these types of patterns. And when they catch my eye, I'm putting them onto the list. At this stage, I'm not quite worried about the quality of the base. That part comes later. For right now, I want to just see what's setting up in a pattern that I'm interested in, and then I'll throw it onto the list. And then for this week, since I've done this part of the exercise already, so far I found 55 potential ideas for next week. They're all sitting here. So that's what the trade ideas part of it looks like. Now we want to separate the wheat from the chaff. That's going to make up what I call the in the neighborhood list, then the focus list, and eventually the stocks that are the best on the focus list make their way onto the action list. And if they trigger an entry, then I'll buy them. So, what is the difference between these three lists here? Well, the in the neighborhood list are stocks that they caught my eye. They're close to setting up, but they're not quite there yet. When I'm going into and looking at uh, all these different consolidations here, let's bring in let's bring MarketSmith back here, so that way you guys could see. So, for example, I'll go over to here on a daily chart. Most of the time I'm doing this kind of work over on TradingView. TradingView lets me be a little bit more precise, but we'll stick with MarketSmith for now. So what I'm looking for here would be, is this setting up where I could have very tight entry and stop. So this is setting up fairly tightly here, but uh, you see how this price bar and that price bar and that price bar, they're progressively making higher highs. In general, when I'm getting ready to buy something, I don't like to see that. I like to see price stay below the pivot area and start to be either drifting sideways or making a series of lower lows in fairly tight action before getting ready to buy. Now, this is setting up, potentially setting up again. This would be on the in the neighborhood list. Let's go to another one, see if we can find a decent one here. Now, this one is a little bit better, but there's a couple of things that I'm not fond of yet here. This one is very close as well. This one here in MDB, this one has started to trade sideways, like I mentioned before, but it's a little bit what I would consider to be extended. Well, what's extended? Well, price is fairly above that green line. You see that little green line sloping up this way here? That's the 10-day exponential moving average. That's a line that momentum stocks typically hold. It's been trading above that line for about 2 weeks. And right now, price is almost 4% above that line. I would rather that green line be closer to where I would look to place my stop loss. And in this case, I would want to place my stop loss right at around 400 because price came up, consolidated a couple of days here, and now it's trying to build a shelf right around that 400 level zone. Let's see if we can find another one here. That one's also extended. This one is a bit more interesting. This one would probably make it onto the focus list where I would start to do deeper work on this one. But you could see how this one also trading sideways. This one has that 10-day exponential moving average, that green line already caught up. And not only that, if I look backwards, right? So from that area, if I continue to draw that line back here, that shelf that it's building out there also corresponds with this level of prior resistance. What's prior resistance? Well, what does that mean? When you think of resistance, think of it like a ceiling. So price was down here, started to walk up, hit its head on the ceiling a few times, right? Kind of painful. Eventually, it breaks through the ceiling. And now what was once the ceiling is now starting to act as a floor. And so that's why if price were to continue this breakout, I would want to place my stop right here because it should not fall below that floor. And that's where I would start out. Let's continue. That's how I'm focus it. That's how a stock would start to get onto the focus list. Now, how does it get onto the action list? You might be wondering. The way that a stock moves from the focus list to the action list, let's just say that this one here is a potential candidate for further analysis. What I would do is then come over to here to merrillwealth.com and use this free tool called the Trade Gauntlet. This Trade Gauntlet has a bunch of various fundamental things to look for, some technical things to look for, a whole bunch of checkboxes, a whole bunch of weights assigned to those checkboxes. And I'll use this tool to make sure that the stock that I'm looking at has all the things that I'm interested in to make sure that it's a good candidate, that it fits the bill, that there's not something that I'm missing on this stock. It helps. This tool helps to keep me in line, and that's why I created it. Now, let's just say that this stock here, COUR, scores a 7.5. This thing will generate, well, once you go through the whole thing here, it can generate a score up to 10. Let's say that it scores a 7.5. I would be willing to trade that stock. I'm willing to trade any stock that scores 7 or higher on this gauntlet. The reason why is because I went through all my prior trades and I noticed that the best trades, the best performing trades, scored 7 or higher. So that made it very easy. Anything that scores less than a 7, hard line in the sand. Sorry, I'm not going to trade you. Anything that scores 7 or higher is one that I'll place an order for. And that brings us to the last slide in this. If we can move Market Smith over. All right. Brings us to this last slide here. Finally, patiently wait for the best stocks to trigger. That becomes the open trades. So when I'm looking for all these different stocks and I have my action list, let's just say that that one that we were just looking at uh, made its way onto the action list. I will place my order for it. I'll figure out how many shares I want to buy. I'll figure out where I want to place my stop loss, and I'll have a sense of where the target should be. I'm not, and the way that I'll use a target too, just to uh, give you some insights on targets. I use a target price not to say that I'm going to sell only at this target that I come up with somehow. I use it as a gauge to see, should I be taking this trade at all? Is there potentially enough juice in this to make it worth the squeeze? If the answer that I come up with is no, then I'm not going to trade it. So in a sense, target is a potential qualifier for me, yet another qualifier. I will take my scale outs, and this is starting to get towards Jaiwei's question. I will take my scale outs in a pyramid fashion, meaning I will sell bits and pieces into strength. The amount that I sell into strength will vary based on market conditions, as it should. If the market conditions are giving a lot more profits, then I should let those profits run. If we're in a choppy environment where the stock will break out, run for a couple of days, and come right back in, and if I observe that many stocks are doing the same, then I should be taking my gains a lot quicker. And frankly, so should you, right? These are all things that we should be paying attention to. So that is how I scale out. But back to the action list, I'll just sit there and wait for my entry price to trigger. And if it does trigger, that's when it gets onto that open trades tab and it makes its way to the top of the pyramid. Otherwise, I'm sitting and I'm waiting. So let's see what questions have come in. Answer Jaiwei's question first here. View pyramid like 50%, 30%, 20% in 3 batches, or reverse pyramid like 20, 30, and 50. So Jaiwei, you are asking about getting into the actual trade. For me, I like to buy my whole position at once, one shot. The reason why is because I'm not trading with the type of capital where I need to worry about moving the market. I'm not trading 100 million yet. And so I can very quickly and easily get into trades, get out of trades. Even if you're trading a $10 million account, right? You don't really need to worry too much. Depending, of course, this depends on the stock that you're trading. Liquidity tends to not be an issue if you're trading 10 million or 1 million. Certainly, if you're trading 6 figures, you don't need to worry about moving the market. And of course, again, that depends on the stock that you're trading. I'm only trading liquid stocks. The stocks that I trade are typically, well above $10. In fact, the vast majority, I would say, are well above $10. Most of them tend to be in the $100 range, give or take. Most of them trade more than 400,000 shares per day. So let's just say that I find this $100 stock, right? So let's get this other tool here. Right? There's another tool that I use all the time. It's on myriad.com. It's called the position size calculator. So let's just say that you have $1,000,000 account. Let's just say that you're willing to risk 1% of that account, and that you found a $150 stock, and let's say that you wanted to have your stop at 145. Well, now you're able to put 30% of your account into that stock, and you're able to buy 2,000 shares. Now, 2,000 shares might sound like a lot to some of you, but if you're buying 2,000 shares, and let's just say that this stock is on the lower end of the average daily volume scale. Let's just say that this stock happens to trade 400,000 shares per day. You're even that 2,000 shares per day, 2,000 share order is a drop in the bucket for the stock that trades 400,000 shares per day. So, since there's no liquidity issue, I'm very comfortable to buy my full position all at once. Now, I will scale out of positions into strength. We could talk about that too if you'd like. So, question from I'm third. Did you always put condition order to buy at stock, or just set an alarm to get into a stock and buy it yourself? Very, very good question. And 9 times out of 10, I will simply place an order. I'll set it with a buy stop limit. So that way I'm able to get in the moment that price crosses where I'd like to enter, and I will buy up to a certain price. And typically that up to certain price is 1% above whatever I've deemed the pivot to be. So for example, bring back this one here. So let's just say I decided that this one here is 19. Actually, you know what? Why don't I give you a stock that I'm in right now? Let's go to Zscaler. Right, so when did I get into Zscaler? Got into Zscaler right here. This had that same flat base kind of breakout here. And so I got in just as Zscaler broke above that line. And so my pivot on that, where I was looking to enter, was 176.60. And so I'm willing to buy up to 1% above that level. The reason why 1% above that level is because sometimes price will gap up. Like you see the following day over here, price gapped up. Now, let's say that I wasn't in there yet and I wanted to get in there. Well, if I set a working order to just buy if price moves above this line, it's possible that price could gap up significantly. There's been times where prices gapped up 5%, 10%. And if you end up buying the same number of shares that you had planned on buying at this lower price, that ends up messing with your risk. I don't want to mess with my risk. The risk management part is one of the most important parts of trading. So that's why I use a buy stop limit order up to 1%. So that way my risk is not increasing that much. And I'm able to plan for those things. Now let's see here. Okay, wait. I am new to trade, so my capital is small, but many people advocate pyramid. We don't need to be accurate 100% at one shot since we buy 3 times. If assume you have 100 million, how do you pyramid? If you have 100 million and you are pyramiding in, then the way that O'Neill presents to do it, right? Because I'm not doing this myself, so I'll present the way that that I've learned how to do it, and that the first way was O'Neill. And at one point, I was following that exact method, and well, what I found was that it would run up my average cost, and it wouldn't be that beneficial to me. So the way that O'Neill would do it would be to buy 50% of your position when price crosses your pivot. Then he would add 30% when he's up maybe about 2% or so, and then add that last 20% when he's up about 4% in that range. It worked very well for him. And he was also trading much larger capital. So with much smaller amount, right? Like, so let's just say that you're not trading 100 million. Let's say that you're not trading million. Let's say that you're trading 10,000. Uh, I think that you're actually better off buying the full position versus scaling in this way versus seeing, oh, am I right? Because what will end up happening too is that when price starts to come back in, your average cost uh, is higher, right? Because you bought here, let's say you bought here, then you bought a little here, then you bought a little there. So your average cost is higher. Now let's just say the stock pulls back. You'll end up with a larger loss because your average cost is higher. I didn't like that. So that's why I switched to this method where I'm going to buy my full position, say right here, and come up with a trade management strategy where I'm going to raise my stop to break even as quickly as possible. So by day 2, right, when price was here, I had already moved my stop up to break even. I view that distance between the entry price and the stop loss as the amount that we're willing to pay to see if this trade is going to work out or not. So with every single trade that I place, I'm seeing there being a cost associated with that trade. Once I get my stop to break even, I'm seeing that cost as being back in my pocket. So that's money back in my pocket. And the rest is profit. That's the gravy. So anyhow, I hope that you found this session helpful. If you did, please let me know in the chat. And also, by the way, too, if you have any other questions or if you want to suggest topics for the next session, drop those into the comments as well. And come over to myriad.com. Let me see if I could find the website here. Yeah, there it is again. Yeah, so go over to myriad.com. There's a whole bunch of things that can help you on this page. A lot of education, a lot of tools, a lot of services. Go to the website myriad.com, explore, get some free downloads, join the newsletter. We put out lots of free education every single week, and you'll be able to email me directly and let me know what sort of topics you're interested in, and that'll craft the next session. Until then, happy Thanksgiving all, and I'll see you next time. Take care. Much love. Peace out.